Hey traders, happy Monday. Chris Pulver here with another weekly outlook. It's the week of the 17th of February through the 21st. We are starting the week off on a bit of a slow note with the U.S. bank holiday. It's President's Day today, so let's talk stocks, Forex, cryptos, and see what we got shaking for this week. Let's see here. I just posted a video. I have a new trend lines portion of my YouTube channel. You can check that out by following me on any of the social media platforms. Instagram at pulver.chris, Twitter at pulverchris, Facebook, YouTube, just look up my name. My YouTube channel should have me in a suit. I just posted the video. Keep it seriously simple. Best trading strategy video series. It is a trend lines video. There are two videos that go along with that. This week, look for the video on trade size and leverage and margin. We're going to be adding to those video series this week. Leave me likes, leave me comments, subscribe to my YouTube channel. That's the best way to get those notifications and find those videos. For this week, let's go ahead and dive into the charts and calendar. So we have this week's calendar, again, bank holiday today. It's U.S. President's Day. So we have Aussie monetary policy meeting minutes. We have a lot of CPI and PMI coming out this week. We also have an unemployment news announcement on Wednesday for the Aussie. Let's just go down the list. Recently, we have seen a weaker euro. We've seen a slightly weaker Swiss franc, which has been nice to see. But the euro's been the big story. Euro dollars headed down as low as 108.30, 108.20. Let's see here. Aussie, we have news on Wednesday. That's about it. But CPI numbers coming out for the pound and the CAD. U.S. has the FOMC meeting minutes on Wednesday at 2 p.m. Not a rate decision, not a press conference, just minutes. So look for a statement on Wednesday. And then PMI numbers coming out on Friday for a ton of countries. We have retail sales and PMI for the U.S., retail sales for CAD. We have Eurozone, that's going to be France, Germany, and Eurozone PMI numbers, as well as UK or pound PMI on Friday. So not a super busy calendar. With a somewhat slow start with the U.S. holiday, expect the markets to pick up in some volatility. I'm interested to see what happens with the coronavirus notes this week. We've been keeping an eye on this in my trading room. The cases have continued to climb, but so are the recoveries. Now, I did the math here based on cases and deaths. It's still right around 2.3, 2.4%. That's still quite high compared to common cold and flu, which kills a lot more people. So this is something we're not really going to forget about. This is something I'm checking in my trading room regularly to see how this correlates, with, especially when it comes to risk appetite. There's additional quarantines. I know that a lot of companies are announcing slowdowns and, supply and demand levels and exports are getting messed up because of the coronavirus and things that are delayed. In fact, just this weekend, my wife and I were at Costco and we were looking at something that, shipments were delayed anywhere from 6 to 8 weeks. On something that could take normally 7 to 10 days. So, it is affecting business. However, let's see if that drips into the stock market. I am curious, what this is going to look like on the SPY and other instruments. We are sitting here with an incredible amount of overbought conditions. Now, granted, the stock market is not always technically obedient and technically efficient, although I think that as we keep melting higher, it does look for kind of an inevitable correction. It just depends on how violent that correction is going to be. We're still seeing a ton of support on every little automated trend line. This is just something very simple. This is like a 34 and a 50 moving average and a 200 moving average. Those are widely accepted, industry accepted moving averages, and nothing out of the ordinary. But on a daily chart, are we going to continue to see this short-term support, and keep this melt up going? Or will we end up breaking this structure and getting into this area, which does beg the question of how deep of a correction would it be? So just in preparation of that, I want to see if we come back down towards that 100 to 200 moving average, what exactly would be the drop in price. So if we drop into this zone around 307 from 337, let's just do the math there. So 337 minus 307, that's a 30-point correction divided by the high. We're looking at about a 9% correction. Now, I have seen, we had a 3.5% dip right there before we started going higher to new highs. An 8 to 9% correction doesn't really change the structure. It would offer buyers a chance to buy low and keep everything running into this U.S. election in November. I know that's a long ways away, but we can't ignore what's happening here. So, does it drift higher? I keep setting chart alarms like every day at the highs on these U.S. indices, the SPY, the Dow Jones, the NASDAQ. I'm setting chart alarms at the high, and almost every day they're getting hit. Now, they're not necessarily closing higher, but they are getting spiked and touched almost every day. The market is trying to reach for new highs. Again, it is divergent. It is overbought. We know this. You can look on every major index and see the same thing. We have a new high in price, very obvious disagreement in momentum. Look at the NASDAQ. Highs in price, completely overbought, again, divergent. So, this does look for a correction. I'm expecting a correction. How do we trade that correction? Well, you can draw some aggressive trend lines in here. Expect this to give us a big spike in the VIX, the Volatility Index. If that starts to work its way aggressively higher, this stock market will start correcting. I have seen, 8, 9, 10% dips expected. If you look at the overall structure, that's about where it measures. A 9 to 10% correction gets us back into support. So am I calling that this week? Of course not. I'm not. But things are going to have to roll over and things are going to have to get really scary for that to happen. Just be ready for it if that's the case. Meanwhile, we have the dollar index, and we'll get into currencies here in just a moment. Cryptos have had a fantastic last couple of weeks, and really since the start of the year, I have made a nice little chunk of profit in my, by positions that I've taken. I've added to my positions near the 2018 lows, 2019 lows, and loving the fact that cryptos are getting some bullish momentum. The dollar index, I was reviewing this last week with some team members, and take a look at this. So let me use the smart wave pattern from this high right there. So this is looking for a little bit of a corrective wave. So we have the 1, 2, 3, 4, 5. We have a corrective wave to the upside, which again should still fail off of this resistance, but maybe a short-term dip in the dollar, and then one more rally to get us back into this resistance back in October levels. This is September, October of last year, 2019. From there, now we're talking big trend. Big trend to the downside. I love the seasonality of the markets, especially the Forex market in March, or I'd say late March to early April. April to May tends to set up this really nice transition and really strong trends. So just like we saw last year in the pound crosses, April was a run-up month and May was a complete downward movement that took us all the way through the summer. So I'm almost looking at the dollar to do the same thing. So if we end up seeing, the rest of February, maybe down here, we get into March and we stay pretty steady. March to April, we still pick up and run to the upside a little bit. Come into April, May, let's see if we can transition into a bear mode going into May and just stay on that trade. I would love this technical pattern to come together. This is a large, weekly, monthly pattern we've been waiting for a long time, and the technicals are really, really solid. But I'm just thinking of when would the market like to do this? We have this cliche in the markets called sell and make go away. If that tends to lead to the dollar as well, or maybe in order to keep the stock market afloat, the dollar has to really take a big nosedive. I've been watching 10-year notes and 20-year notes, and they're in complete opposite levels. We have 20-year notes at very high points. We have 10-year notes at low points. So somehow those are going to have to balance. If you want to know what I'm talking about, let's take a look at this. This is the 10-year Treasury note, and we're sitting here on the daily chart. Look at how low this is since last year. This is in 2018 October. Go into 2019, we just plummeted in 2019. Can we come back down and retest those lows and then start to see some bottoms here on the 10-year note? But then look at the 20-year note. Okay, look at the 20-year note. It's the complete opposite. In fact, 2019 on the 20-year has just gone straight up. So can we come back up to test those highs? Look, something has to balance. So if we have 20-year notes with a double top, 10-year notes with a double bottom, somehow they're going to have to work their way back into equilibrium, I would suspect. So that should end up creating a catalyst for the dollar to move. That dollar index, that DXY, we've been watching and planning and just waiting. So to have some treasury movements like this from highs and lows, we could end up seeing a lot of movement on the dollar, which should be beneficial to us as traders. So that is certainly something I'm keeping a very close eye on, and just do the same. So we're going to be watching the dollar here, thinking of seasonality. But if the U.S. dollar in the short term has another push to the upside, don't be surprised. But it's up in this zone, and when it happens, maybe March to April, maybe that transition from April to May, up in this zone around 480 or 12,500, then we start looking for some really nice downtrends. One thing I'll be watching that keeps this very clean, let's delete that wave. One thing that keeps this very clean would be my sentiment strength line right here. So right now we're staying bullish, and it's not going to change colors here until we break below this low. So if this just does nothing, this will remain green. But as soon as we get a red line confirmed, I'm looking for that to be more red to the downside. That can take this high to low and match that with symmetry. We should at least come back down to this level around 12,200. I would like to see it go a lot lower than that, obviously, possibly down into this area. But any type of trend to the downside on the dollar looks fantastic, and volatility will likely pick up dramatically. But again, this is a really clean way to see the trade and confirm the trade. Right now, there's nothing to do as a seller. until the price can actually push low enough and close below these 3 previous lines. And from there, then we start mapping out our symmetry, then we start mapping out the bearish confirmation. So that's one way we can help confirm that this dollar is ready to go. All right, let's go to some other currency pairs here. Let's take a look at cryptos. Bitcoin, we are above 10 and change. You can see that once we hit 10 plus, it was 10,400. We are having a pullback. It's not a surprise. I mean, I did notice some overstretched conditions. I was noticing some disagreement here. We had some new highs in price, slight disagreement. We also have a lot of pivots that have been missed since this U-turn and channel break. I do think that this should be a move to the upside, a correction back into trendline support. Hopefully, we'll see the buyers come back in with a higher low, and we start looking for higher highs once again. I'm targeting those 2019 highs. This is around $13,700 on Bitcoin. Ethereum really led the charge over the last couple of weeks. Ethereum's made a nice run to the upside, as high as $280 or so, coming off the lows around 127. That's a huge move. The fact that it closed above that yearly pivot, again, you can see this nice swing to the upside. Any pullback, look for something like the 38, the 50, the 618, some nice Fibonacci zones in here. We should see higher lows to higher highs. Looking at highs back in 2019, around $360. So that looks pretty solid. Let's see here. Litecoin is another one. Nice run to the upside, well above the yearly pivot on a couple of closes. We can draw a trend line in here for some support. Right in here, look for some support. So if we have a bit of a pullback, look for some indecision. Hopefully we see some buyers coming back in. Highs back into 2019 should be somewhere around $150 to $200. 145. Okay, so 150 bucks right there. That's 2019's high. But let's see if we get a little dip, little pullback, and then start rallying back up towards those highs in 2019. Ripple, another one we've been watching. That one had a nice spike to the upside around 35 cents, has pulled back pretty violently. But again, let's see if we can have a swing, a pullback, higher low, and then a push to the upside. To me, this is really important that even on the back side of this trend line, if it comes back to 24 to 20 cents even, I'm still looking for more buyers to come in and push this higher. We had a run into 2019. This gets us back into around 51 cents. I would love to see Ripple close in towards $1, especially with my base position around 20 cents. But we'll just keep an eye on this. But crypto's had a nice little run. It's not a huge surprise to see a bit of a correction, probably some profit taking, but if there is a chance to buy back in, I like those dips on cryptos. Okay, currency pair wise, let's go to Aussie CAD. Still looking for a nice level around 9020. Right in here, 9020 and 9120. I'm still holding long on the Aussie CAD and looking for this. Another trend line break would be nice. Just be very patient. Lows, equal lows. Let's see if we can break this trend line. If the Aussie has a positive jump this week on that employment news, we should be able to close up that pocket around 9020. I'd like to hold this a little bit longer towards 9120, but my positions are down here near the lows. So I can certainly protect profit here, try to let my profits run towards 9120. Aussie Swiss, I continue to hold long on that one. So I was looking at this last week as a potential bullish head and shoulders, left shoulder, head to neckline, right shoulder. You can see that price has been making higher highs and we started to drift above that neckline break, which is fine. I'm not sure if the market's going to use that neckline as a launch pad to keep going up and we start to see more momentum to the upside, or we may pull back one more time, challenge those right shoulder lows, and then work our way back up, or even come back down and retest the lows again, where I'll probably add more to this position to go to the upside. I'm still bullish. I'm still long on the Aussie Swiss and on a higher time frame. Here's the daily chart, and this goes right along with my trend lines video that I posted on YouTube, which is right here. So YouTube, here is my channel. That trend lines video. So I have a part 1, part 2, and this goes hand in hand with what I'm talking about. On the right side of the trend line, good things tend to happen. So this is the left side, this is the right side. Even if we have a pullback here, even if we have a pullback here, I'm still a buyer. I'm still looking for this to go to this outer trend line. So an inner trend line break heading towards an outer trend line. An inner trend line break, a retracement. So we have our break, retest, go. Or maybe this is the break, retest, go. Or maybe we come back down to retest the backside of the trend line and then go. I'm still looking long on Aussie Swiss. It's at historical lows, by the way. 20-year lows, which are pretty important for me to be buying from. Aussie Yen, I'm still kind of the same on yen pairs. I'm not really convinced. Unless we have a big move in the stock market or the big move in the volatility index, I don't think the yens are going to do much of anything. In fact, the dollar yen, if it still stays below 110, I'm not convinced that yens are doing much of anything. So the dollar yen still has to give us a nice firm daily and weekly close above 110. Then I'll be more biased to the upside and be bullish. And I think that the yen will follow suit. I think the dollar yen isn't just the only currency pair that's going to move. If dollar yen breaks above 110, we should see a weaker yen across the board. But confirmation, of course, would be based on that dollar yen breaking above and holding above 110. So Aussie yen, I'm going to steer clear on right now. Aussie New Zealand, I booked some short-term profit this morning. It was early this morning. Here was why. If you look at my crosshair tool right here, I was looking to get back into this area right around 104.70. We had highs around 104.64, 104.65. So about 5 to 10 pips off of this little pocket zone. I bought it right here off of the news, right around 104.05, and I'm going to take my little 55 to 60 pip profit right there. It is pulling back a little bit, which is fine. I still have a big base position that I've been building up off of 105, 104, 103. Watching this area very closely, see how price just maybe consolidates a little bit longer, maybe comes back in to revisit the lows around 103, and we should be looking for something to the upside around 107. 107 to 107.50 is a nice profit level for us, for me, and for us in the trading room. If we go any higher than that, we should be able to get something like, these are highs around 108.50. Getting back to those highs, getting to 109, 110 would be just excellent. Those are huge, huge profits. But the key right now is just to stay patient and try to identify when this thing's ready to go. One thing I'm considering that I'll talk about this week in the trading room is possibly adding some more positions up here and just kind of having some levels stacked in. Again, if it pulls back, we're obviously not going to get filled on those positions. But if those were pending orders, if price is in fact going our way, I want to add to those positions because for me, the probability is price is going to come back at least to 10700, 107.50. So we can add more to that, take a bigger chunk of profit and protect. And because we could protect some profit down in here, we can let those profits run. That's probably what I'll end up doing. But I also think with this currency pair, we'll probably have some type of retest of these lows around 103, maybe a spike back down, something around 102.50-ish, and then we start going to the upside again. But it still looks good to the upside, and I'm going to stay long on the Aussie New Zealand. Aussie dollar, still hanging out off of these lows. This is another one for the right side of the trend line if we can spend a little bit more time this week. A couple more candles on the right side of the trend line. Let this look a little bit better. Right side of the trend line, good things happen. See if we can get a retest of the lows and then a move to the upside. Or just a simple break of the trend line and a pause right now. Let's see if we can get another push to the upside this week. Maybe a slightly more dovish tone from the FOMC minutes, or maybe a nice jump on the Aussie employment this week can get this thing turning to the upside back towards highs of, I'm looking at a level specifically, 6837. That's a target one for me. There's also levels at the round number 7,000. That would be target two. Our base position are these blue levels. So this is where we've been buying. Taking profit here is fine. Taking profit here is awesome. That's Aussie dollar. CAD Swiss, we did protect some profit on this one. I was looking at 7,400 to 7,420. Mission accomplished. So if you're in, we have positions at 73.30, 7,300. Take a few pips, take a few profits there right around this previous structure support, around 7,400. So great trade on that one. Most traders had a couple positions in, so there should be 100 to 200 pips of opportunity on that CAD Swiss. CAD Yen again, staying out of that one for right now. We'll keep a close eye on this one in case we pull back to retest the backside of the trend line, but the yen pairs are a bit on the slippery side. Swiss yen, not really offering too much. You can see that we have resistance right up here around 112, and we're just hanging out right at 112. So I need to figure out more of this, Swiss versus yen. That's a tough one because they're both safe havens. So do we break to the downside on a weaker Swiss? Do we hold the lows and start heading back higher on a weaker yen? I'm not sure yet. This is kind of a toss-up trade, but it does have some really good support and resistance levels. I'm just trying to eye what would be the best opportunity for possibly just a simple trendline break and maybe some support breaking as well. Euro Aussie, big profits for a lot of traders over the last week or so. We sold this at 63.50. Some traders sold it as high as 65 and change. Took this all the way down to let those bears score a point around 61. So we had lows just below 6,100. I know that we were targeting 6,000. If you're still hanging on to it, fine. But with a couple days of indecision, get those stop losses in, trap those profits. That's a great win from 63.50 upwards of 6,500. Nice win. Take some profits. Protect it and enjoy it. We'll probably get another chance to sell this one again. If we have a pullback, we can look for a pushback down to 7,000 or 6,000. If we have just more of a pause and price goes sideways, I think it's still going to drift lower towards 6,000. EuroCAD. So we were filled around 43.50 on a short-term buy trade. We have, you can see the candlestick count here. We're pegged at the lows here on the oscillator. I'm looking for some type of movement to the upside. I'm not asking for this to go into huge profit, but I do think from these lows to this little pocket, I do think that price can work its way back up and offer us a trade. Now, what I should be doing and what I probably will do is if this goes a little bit lower, I'm going to look for another position to add, and then this becomes a break-even level and this becomes a profit level. So this one would be break-even or small loss. This would be a nice little win if I get another entry. A lot of the reasons I'm looking for this, or main reason I'm looking at this, is because look at all the candlesticks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 in a row to the downside on a daily chart. That's a lot. So is this just falling, 10, 11 days in a row? If so, fine, but we should have a pullback into this area here. So, last week, I was a little disappointed that, number one, we got filled and there was a pullback. I didn't close the trade soon enough. But with 10 candles in a row, I think we're forming some, oversold conditions, possibly some disagreement, divergence, things like that. We can get a nice little short-term correction. If I can get another position in, that should be a winning trade. This can be a break even or a small loss. So I could at least walk out with maybe a few dollars in profit. There may be a bigger recovery at hand, but I'm not trying to turn this into a big trade yet. Right now, I'm just going to try to work this back to nice structure around 44.50, 44.60, and I go ahead and get out a break even or close to it. But if I can add another position, then I'll be sitting in some nice profit there. The next level I will add to, just so you know, if this does drift a little bit lower, anything around 42.50 to 4200, I would be adding another position and then take it up there. This is just good support and resistance. Right there to right here. Nice little pocket zone on the weekly chart. If we can buy it off of 42.50 to 4200, then we're looking at 200 plus pips of profit, getting that add-on position, and then one break even. So that is one trade I'll certainly entertain as kind of a plan B on this EuroCAD from last week. Euro Swiss, I'm still going to hold long. This is another, kind of lesson in trend lines here. We're on the right side of the trend line. We are on the right side of the trend line. We are looking for disagreement between price and momentum. Price has not quite responded yet, but I'm still watching to see what is the driver here. Do we get a nice little bullish candle? If so, is that enough to drive this thing higher? One thing I'm also looking for these nice U-turns is the sentiment strength line. So we've had like 20 some lines in a row, which the average for most of these line break strategies is around 6 or 7. So the fact that we've had 20 some lines in a row to the downside, daily chart, if we just get a push, this needs to go 3 lines higher. So right now we need to see price get above 106.60. If we close above 106.60, they're going to have a nice little U-turn. And from there, I'm looking for that U-turn to be in the clear. We carve out some lows. We start looking for a recovery. And we have a lot of room back towards, I'm looking at 110, 110.50, a yearly pivot at 110.45. I'm going to hang on to this one for a while. But anyway, looking for a U-turn on this Euro Swiss. Again, on the right side of the trend line. I'm just going to go ahead and extend this and just see how price continues to behave on the right-hand side. We should see some indecision here between 106.50 to 106.00. Hopefully that ends up carving out some nice lows for us. Euro Pound, this one should be heading back up a little bit. We came back in to retest these lows from last week. I have 2 small positions in, 84.80 and 83.30. There's not much wiggle room I'm going to give here. If this ends up going back up, we're going to take some profit. If it ends up closing on a daily chart below these lows, then I'll probably get out of this trade. All right, so I'm going to see if this one can hold firm and protect these lows and maybe turn this into a nice little win. Or, again, get back to break even on one trade, take profit on the second trade, and close it up. That's fine too. But as long as we're not closing below and invalidating this area, then we're going to hang out of this trade and try to get back towards break even around 84.80. Euro Yen. This is the only pair that actually slid last week. The yen pairs have done really nothing, but the euro was so weak that it ended up going lower. I'm still going to leave this one alone for right now. Euro New Zealand, a lot of traders were taking profit on the Euro Aussie. We had a short-term news event last week. It was, I think, the rate decision for the Kiwi, and price ended up dropping really nicely. So traders were short on the Euro New Zealand. They enjoyed that little run in the news, took some profit around 68.50 or lower. I would leave this one alone for right now. We're probably going to end up drifting possibly more sideways here, maybe a little bit lower into this support. And I wouldn't be surprised if we see a push to the upside to fill that pocket around 69.80. So I still like an opportunity to look to buy, but it's got to be a really nice setup for us because it is a negative rollover trade. In addition to that, I'm still long on New Zealand Swiss, looking to go long, which should help this pair go a little bit lower. So if we come into great spots like 6,700, I'll consider a buy trade. Otherwise, this is probably a sideways move. Push down, little flag pattern, look to sell it one more time, targeting that 6,700 level or lower. Euro dollar. A lot of traders probably wondering, when is the bottom coming? Where can I start buying this? Look, dollar index is showing no signs of bearishness at this point, and euro dollar is showing no signs of bullishness at this point. Best way to trade this is we talked about scalping this below 110. It's at 108, 108.30. So there's plenty of scalping opportunities to short this and grab 30 pips here and there, 50 pips here and there, 100 and some pips riding this thing from 110. I know I had traders that shorted this at 112. So anyway, we're not confirmed with any type of bullishness yet. This has to turn green for me to say, hey, it's maybe time to buy, start looking at price patterns. We do have I just looked at this chart right here. This is a 30-minute chart. We have a nice bar count on my 30-minute chart. I tend to look at the higher time frames, though it's not really that overextended on the 1 hour. So we're only around 197 bars on the 1 hour chart. It's just not that extreme. It looks like it just can't win. It looks like it can't turn bullish. But look at where we are. Okay, we've had structure here since lows back in August of 2018. Bear score point, they rally. Bear score point, they rally. Bear score point, they rally. Bears are scoring a point right now. If we come into the lows around 10800, look, it's probably a logical and technical reason for this level to bounce and go back up. But rather than putting in, again, keep in mind, I've canceled trades here. We initially had buy trades at 110, buy trades at 109, buy trades at 108. I've canceled all those trades. And the reason why is, look, we should be selling this. And if you have been selling it, you should be protecting your profit. Now, as a buyer, I think the best plan is to look for some confirmation to take this back up. It could be and should be around that 10800 level, but it might dip a little bit lower. I'm sure there's some entries in at 108. I'm sure we're looking for some indecision. Look, keep it simple. The sentiment strength line, if we turn bullish on this, I would feel a lot more confident that we are confirming that U-turn. Then we can start working a pattern. I also have this little amplifier indicator. Okay, look at this. On a 4-hour chart, is it bullish? Not even close. On an 8-hour chart, is it bullish? Not even close. On the day, nothing is giving us bullish confirmation, right? So let's wait. Let's wait. Price will do what it needs to do, and we'll see those U-turns when it's time. So if you've been selling, protect your profit. If you're looking to buy, wait for confirmation. This should be a nice channel low, working its way back up the channel high. Maybe it's not this week. Maybe this is a nothing type week for the euro. Maybe the euro dollar doesn't do much of anything other than stall at this 10800 level. But all it takes is stalling to build up some possible buy interest. And from there, from buy interest, buying the lows, protecting profit at the highs. This is right now resistance. We have support at the lows, resistance at the highs. So watching that area carefully. If you look further left, there's also an incredible amount of support around 10550 to 10500. But that would be, if it falls really aggressively and all of a sudden starts to change the structure, I would be more confident that if it falls aggressively, we are definitely looking for a bottom to form, right? If it just keeps staying within the structure, back and forth, back and forth, back and forth, this can be a long time before we have any significant move to the upside. The longer it stays in this structure, the tougher it's going to be unless you're just scalping off those lows and highs. But the bigger trade that I'm looking for is this should be able to come back into a corrective zone around 116, 117. But I think to get there, this has to set up a big move to the downside first and then set that extreme up to get every trader on board with thinking, okay, it's a short, let's sell it. And then it's a reversal. All right. So be leery of this major support at 105 because I think that could act as another level of future support right there. But until then, if we have confirmation off the lows at 108, we can possibly take a buy trade and stick with a range and then deal with this consolidation. All right, so that's euro dollar. Pound pairs haven't done much. Pound Aussie hasn't done much. Let's take a look at this one. Pound Aussie. So there's a couple of options. This goes back to what I talked about for the last couple of weekly outlooks. If we end up scoring a point here for the high, look for this high, this high, this high to give us disagreement in momentum. I think that is a chance to sell high. Otherwise, if it doesn't do much of anything, high to low, a little sideways move, and then we start breaking this trend line, this is still a sell zone. I'm still actively looking to sell with confirmation, either this level or sell kind of a divergent top on the Pound Aussie, but I like that one for a, again, sell high or confirmation of that rising wedge break. Pound CAD. Same thing. Pound CAD hasn't broken the trend line yet. Leave this one alone until we have more confirmation. Pound Swiss. Weaker Swiss has allowed this to recover. I still think this is going to head one more push lower. High to low. We pull back into these levels, so pull back. If we stall here, probably heading back down one more time. I'm trying to, I don't know, we'll be patient. I'm looking to buy it in here. I'm going to buy the lows. I'm not going to short the Pound CAD or the Pound Swiss. I'm just going to wait. I want to buy it low. I'll let this one play out a little bit longer. I still think a lot of Swiss franc weakness technically makes sense in my world. Pound Yen. Leaving it alone, but you can see a lot of indecision on the Pound Yen. If this level breaks below 141, I'm going to be a seller. If we break below 141, I am selling and trying to get aggressive to the downside back to these October levels. This could also be a high volatility currency pair. So if we break below, looking for systems to trade, systems to deploy, 1 hour chart, 15-minute chart, 30-minute chart, anything that's active enough and precise enough to get some nice trades to the downside, trying to score some points for those bears, trying to get back into these October levels from 2019. Pound New Zealand. Pound New Zealand, a lot of resistance around 204 to 205. This one is setting up somewhat similar to the Pound Aussie. If we end up, either breaking this trend line, that's probably a sell trade. If we end up just staying firm for now, but hitting more resistance, that's probably a sell trade. So I'd favor selling the Pound New Zealand nice and high. We might have some intermediate support resistance around 9,500. If it comes lower than that, that's great. But it's going to be kind of, it's a box. I mean, we have this resistance, this support for right now, this support as well. So we could just go from range high to the midpoint. If we break that structure, this is going to be a little bit more of a fight for those bulls and bears. We might end up sliding down to, protect the sell trades, but certainly look to buy and play the range. So a lot of range bound trading on that Pound New Zealand for right now. Pound dollar, we're back above 3,000. All right. Now, if we get back below 3,000, this is something we're looking for in the trading room last week, is if we get back on the right side of this trend line and get back below 3,000, this could be another sell trade back into 2,800 or lower. So it's been a little weird to see the euro steadily decline and somehow the pound has retreated and recovered back above 3,000. So the pound actually stayed somewhat firm. The euro has just been weak. The dollar's been stable. But if we get back below 3,000, I'm still looking for a sell opportunity on the pound dollar. New Zealand CAD. New Zealand CAD, I'm looking for a nice clean trend line break to get to the upside for one more push towards 89 to 9,000. New Zealand Swiss. Right side of the trend line break, just like with Aussie Swiss, the more time we spend over here, the better it looks for this to go back up to channel resistance around 6,500. If it ends up falling a little bit lower, we do have some pending buys off the lows around 6,200, but I'm still looking for this to be a trade from range lows to range highs. Take a look. Range high, range low, range high, range low, range high, range low. If we build some lows off of 6,200, trading back to range highs around 6,500. New Zealand Swiss. New Zealand Yen, staying out of this one for right now. It's kind of right on the brink of either. I mean, you can see the consolidation. We have some sideways movement from 70 to roughly 71, so about 100 pip range for right now. If that range breaks, that's probably the next continuation. So what we might do, I'll just go ahead and box this in. Look at this low to this high. And we do have a price gap around 7,200. So, I don't know, just play it close. Don't give it a lot of wiggle room. I mean, if it can't break below this low, can't break up above this high, then it's going to be range-bound trading, or it's a stay-out zone. There's not really great trading in there unless you're going to scalp those ranges. Otherwise, the next big trade would be closing below here, going lower. Closing above here, going higher. And look for a nice clean breakout trade. The measurement of this range, about 100 pips, I would look at least 100 pips up or 100 pips down. And there's probably more momentum to go on top of that. But that'd be a range opportunity on New Zealand Yen. New Zealand Dollar, filled on a couple of levels. This one looks really good, especially on the right-hand side of the trend line. We just need to get there. So something to help carve out some lows, some time to spend on the right side of the trend line once we get it. Hopefully this is a head and shoulders pattern. That was probably drawn pretty poorly. But left shoulder, head to neckline. That would be the neckline right there. If we get on the right-hand side of this trend line or have a double bottom in here, I'm looking for this to rally back up towards that neckline and hopefully just break and go higher from there. 7,000 would be an excellent target, a nice round number to trade for the New Zealand dollar. Dollar CAD, traders were short around 3,300, 3,315. Some had multiple positions in. They've taken some profit between 3,250 and lower. And that's good. Look, it should still slide. This might come back one more time to retest the highs. We might have high, low, pullback again, but this should still be a sell trade. We might just have a big range from 3,300 down to 3,000. So I'm still favoring the higher this gets towards 3,300, the more I want to sell it. The halfway point is right around 3,150. The low's around 3,000. So sell high, buy low, protect your profit the whole time. So and again, selling it from 33 and change, not a lot of risk that we had on the trade. It went down about 60, 70 pips in our favor. So do something with that. Dollar Swiss, as the euro dollar keeps going down, dollar Swiss, we have a yearly pivot around 98.50. I'm also looking at a nice pocket around 9,900. So I'm trying to stay long in this one. I have a couple positions in there and there and there. I haven't added anything to this, but if we get back up into this zone and close higher, I'm just going to stay long until we hit this 99.50 zone right in here. Otherwise, I mean, I might protect some profit. I have 3 positions in. I can close out for 3 winning trades right there, take some profit, and I'll probably have another chance to enter it at the lows, which is great. But for right now, I'm holding dollar Swiss long, getting some positive rollover. That also helps as the euro dollar is dropping. This pair is rallying. So this is kind of a hedge. I don't have any trades in the euro dollar, but I'm getting a nice position running on the dollar Swiss. So that will head up hopefully towards 98.50 to 9,900. Then I'll start taking some profit to protect. Dollar yen, watch the 110 level. If we break above, looking for a daily break, a weekly break, we'll see what happens with the news this week. Pretty slow start to the week thus far from Monday with President's Day, but look for 110. Stock market's going to have a lot to say about it. Coronavirus, let's see what the Asia market does this week, but 110 is a must for this thing to go higher. The good thing is above 110, 112, 114 are very doable targets. Dollar peso, not much going on in the peso. I'll leave that one alone. Krone I'm getting pretty interested in. We've talked about this a lot. I'm looking for I just want to find a good clean sell trade. The problem is the dollar is firm and the krone, doesn't really offer any carry opportunity. So it would be a negative swap trade if we take it. But it just looks like maybe a bit more confirmation here or a break. We can keep this again really simple. Look for the sentiment strength line to turn bearish. And if we can get this to U-turn, this is a daily sentiment strength line chart. So if we get this U-turn with red, I would think that a red line stop area above, let's see if we can get this thing to go from high to low, back up, high to low, just even if it's a range right now, but that's still a few thousand pips on that krone. Euro krone, I think this one has already U-turned on the sentiment strength line. Yep, it definitely did. So go back to candlestick charts. This is another one we were wanting to sell around 10.3. We had highs around 10.27. So we did miss that entry. But here it's just a high, low, maybe a pullback. Look for a lower low to hit this level. We're just going from resistance down to this blue line, which is support. There's still some more bearishness, in my opinion, on the euro krone. All right, so let's take a look at the volatility index really quickly. This is the VIX. We're sitting at 13.7. Okay, if this VIX resets even further down to the lows around 12, that means the stock market goes higher. If this keeps going down, 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 down towards 12, then the stock market's going to go up, 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 and keep making new highs. So, I mean, based on this week, if we don't see a lot of disruptive news, what we might see is the stock market drifts a little bit higher, melts up a little bit higher, and the VIX falls into these levels, has a lot more indecision off these lows, but we'll have something spike it back up. And we're going to deal with this. We're going to deal with a lot of volatility on this VIX. We're going to deal with a lot of volatility in the stock market. There might not be a lot of direction, all right, but there will be volatility. We've already looked at, a bunch of missed pivots and kind of the inevitable correction from an 8 to 9% technical level. But again, what's going to be the driving factor behind it? Right now, the only real slide the market has seen was 3.5% on the coronavirus. And it took a week? We had a horrible week, and then we had a recovery week, and it recovered all of it and made new highs, historical highs in the stock market. So the market continues to be resilient and shrug things off. So take a look at the calendar this week. We have a lot of CPI data, PMI numbers coming out, meeting minutes from the Fed. Let's see what they say. Short-term Aussie unemployment. Let's see what happens on Wednesday. I'm still looking for technical reasons for the Aussie to get stronger, stay firm. Hopefully the key we can follow. This Aussie also on Wednesday. If so, I'll watch that Aussie New Zealand to see, are we coming back down towards 103.50, 103.00, or are we heading higher towards 105 and change to break and go up towards 107? So that'll do it for this weekly outlook. If you have a chance, check out my YouTube page. Make sure you subscribe to it, like the video, get those notifications so videos like this and many more come to you right away. The Trendlines video was posted on Sunday morning, so check that out. Leave a like and leave me some comments, and more videos coming this week. Specifically, I'm going to piggyback off of my growth and equity management video and talk about trade size, margin, and leverage. All things important in trading. All right, let's have a good week, everybody. Talk to you soon. Take care. Bye.